Welcome to The Deep Dive, your shortcut to being well-informed.
Glad to be here.
Today, we're taking a deep dive into ASML's second quarter 2025 financial results conference call.
Yep, the latest numbers and commentary.
Our mission is pretty clear. Cut through the noise, distill the most important insights for you, our experienced investor listener.
Exactly. So you walk away really knowing what went down.
We'll start with those headline numbers from the quarter, then kind of peel back the layers.
Understand the drivers, any big shifts, and yeah, definitely that forward-looking commentary. That's always key.
So let's dive right in. The big picture for ASML's Q2 2025. From your perspective, what was the standout headline figure?
For me, it's got to be the total net sales, a strong 7.7 billion.
Wow, okay.
Yeah, that's right at the upper end of their guidance. And it was mainly boosted by recognizing revenue for one high-NA system.
Ah, the next-gen EUV.
Exactly, their cutting-edge machine.
Yeah.
And also some additional upgrade business helped push it up.
And it wasn't just the top line, right? Gross margin looked pretty healthy, too.
Yeah, precisely. Gross margin for Q2 was robust, 53.7%. That actually beat their own guidance.
Nice.
And then the bottom line, net income came in at a hefty 2.3 billion. That works out to 5.90 euros in earnings per share.
Okay. And orders. What about the bookings situation?
Net system bookings for Q2 were 5.5 billion. And that pushed their total backlog to around 33 billion by the end of the quarter.
33 billion. That's substantial.
It is, and they finished Q2 sitting on a very comfortable 7.2 billion in cash equivalents, and short-term investments. Speaks volumes about their financial health.
So all in all, sounds like a pretty solid quarter, wouldn't you say?
Absolutely, a very solid showing. But, numbers alone don't always tell the full story.
Sure.
For you listening, the devil's often in the details, right? So let's really peel back the layers on these financials, see what truly drove things this quarter.
Sounds good. Let's get into that detailed financial breakdown then.
All right, so net system sales totaled 5.6 billion. This was split between 2.7 billion from EUV, that's extreme ultraviolet lithography, and 2.9 billion from non-EUV systems, mostly their DUV, deep ultraviolet machines.
And the application split, logic versus memory.
Right. What's important for you here is that logic applications were the main driver. They accounted for 69% of those net system sales. Memory made up the other 31%.
69% from logic. So while logic clearly dominated, what's the key takeaway there? Is that consistent with their strategy, or does it suggest a wider market shift?
Well, that 69% isn't just a number. It really underscores ASML's deep entrenchment in, the most advanced high-value chip production.
Right, the leading edge.
Exactly. Logic, driven by things like AI, data centers.
Yes.
It tends to be less cyclical than memory, so it's a sign of their critical role in enabling that cutting-edge infrastructure.
Makes sense.
And their install-based management sales, that's upgrades, services, things like that, actually surpassed guidance to hit 2.1 billion.
That's a strong showing for that segment.
Okay.
And on the expense side, how do they manage costs?
Operating expenses were pretty much in line with what they guided. R&D came in at 1.22 billion, SG&A at 299 million. Predictable stuff.
And taxes.
The effective rate for Q2 was 18.1%. They're still expecting the full year rate to land around 17%. So very stable there.
Okay. Let's move to revenue recognition and those margins. You mentioned the strong Q2 gross margin. What were the main factors behind that? Any surprises?
Well, it was down to several things. That increased upgrade business we mentioned, some positive one-off items that actually led to lower costs than expected.
Oh, interesting.
Yeah, and a lower than expected hit from tariffs also helped. But, and this is important, this impressive margin was partly offset by the dilutive effect of recognizing revenue for that first high-NA system.
Right, the new tech always costs more initially.
Exactly, and that's a crucial factor, especially as we look ahead.
And that high-NA impact, that flows directly into their guidance for the second half, doesn't it? What are they signaling for gross margins then?
It does. For the second half of 2025, they're expecting gross margin to be a bit lower than the first half, primarily because, yes, more high-NA systems will hit the books in those dilute margins initially. Plus, they expect lower upgrade revenue compared to the strong first half, and those positive one-offs won't repeat.
Gotcha.
Still, the full-year gross margin expectation remains around a healthy 52%, so still strong overall for the year.
Okay, let's shift focus a bit to the order book and that backlog, that 33 billion backlog figure. Any interesting nuances hiding in there?
Indeed. So those Q2 net system bookings were 5.5 billion. That breaks down to $2.3 billion from EUV and $3.2 billion from DUV.
DUV is still significant then.
Oh, yeah. And logic continued its dominance in the bookings, too, at 84%, with memory at 16%. But one point that really stood out was that the reported $33 billion backlog figure actually reflects a $1.4 billion adjustment downwards in Q2.
An adjustment? Why?
It relates to customer responses to the 2024 export controls.
Ah, okay, so hitting China-related business.
That's right. It largely impacted DUV tools and some application-specific business related to China.
I'm particularly curious about that adjustment, that $1.4 billion related to export controls.
Yeah.
Means practically, especially for their DUV business in China?
Absolutely. That $1.4 billion isn't just some accounting footnote. It's a direct consequence of customers rethinking their equipment needs because of evolving trade policies.
Right.
It really highlights the shifting landscape, particularly for DUV sales into China, and it underscores how ASML has to constantly adapt its sales strategy to these, well, geopolitical realities. You see those external factors filtering right down to the bottom line.
Okay, makes sense. Now, on capital deployment, returning value to shareholders, what were the key actions there?
Well, ASML paid out a final dividend of 1.84 per ordinary share for 2024. That brought the total 2024 dividend to 6.40
Okay.
And looking ahead, the first quarterly interim dividend for 2025 will be 1.60. That's payable on August 6th.
And buybacks. Did they continue repurchasing shares?
They did. They bought back about 1.4 billion worth of shares during Q2.
So they're keeping up with that program.
Yep. That brings the total under their current 2022-2025 program to 5.8 billion. So clearly demonstrating a commitment to returning capital.
Definitely.
Yeah.
Okay, let's zoom out a bit. The broader market, the business environment, what's driving things?
Well, no surprise here. Artificial intelligence remains the core driver for growth in both memory and logic.
Still AI everywhere.
Pretty much. Logic system revenue is expected to increase in 2025 as customers add capacity on those advanced nodes, and memory system revenue is also expected to stay strong. That's thanks to transitions to next-gen HBM.
High bandwidth memory, crucial for AI accelerators.
Exactly. And also the move to DDR5 products.
Now, it's worth noting what they said about China. Expected to be over 25% of total revenue this year, before moderating back towards its share of the backlog.
Right. And management made a point of saying China demand remains strong. It's not, quote, falling off a cliff. They did note a shift in DUV business towards China, though.
Interesting nuance. So, still strong demand, but maybe the type of demand is shifting due to controls elsewhere.
Seems plausible. And for their advanced customers, EUV capacity is projected to jump by around 30% in 2025 compared to 2024.
30% capacity increase. How are they achieving that? Just shipping more machines?
Well, here's what's fascinating for you as an investor. The higher productivity of the NXE 3800E, that's their current workhorse EUV system, means this capacity increase can actually be met with roughly the same number of system shipments as in 2024.
So higher output per machine.
Precisely. And this benefits them through higher average selling prices for the more productive machines and improved cost margins on them, too. It's really about ASML driving profitability within their existing product lines, not just selling more boxes.
Clever.
So overall, EUV revenue growth is still expected around 30% for 2025, matching that capacity increase.
It also seems like that install base management segment, the upgrades and services, was a surprisingly strong driver this quarter. How significant is that part of the business beyond just selling new machines?
Oh, it's incredibly significant. That upgrade business was particularly strong in the first half. Why? Because customers were completing productivity upgrades on those NXE 3800E systems, getting them up to the full 220 wafers per hour spec.
So extracting more value from existing investments.
Exactly. And this whole install base segment is expected to grow more than 20% over last year, driven largely by increasing service revenue. So yeah, even beyond new system sales, that install base is proving to be a really valuable recurring revenue stream.
Good point. And on their cutting edge stuff, the high NA EUV technology, what's the latest there?
They reported good progress across their comprehensive portfolio. The current EUV workhorse, the NXE 3800E, is helping customers expand how they use EUV. It replaces more complex multi-step DUV processes.
Multi-patterning, right?
Yeah, replacing that with single EUV exposures, which means lower COD, faster cycle times, better yields for the chip makers. So, to put that simply for you listening, it's like ASML is giving customers a new set of super efficient tools, less work for the same or even better results.
That's a great way to put it. And that first next-gen high-NA system, the EXE 5200B, the one designed for high volume.
Yes, the one capable of at least 175 wafers per hour that's been shipped and installed now.
Already installed.
Precisely. This EXE 5200B platform is really key for customers to achieve further shrinks, lower their technology costs, essentially by transitioning more steps to single-exposed high-NA EUV.
Makes sense.
And management noted strong progress on qualifying these high-NA tools. Initial data on imaging, overlay, it's performing well. The next big milestone is getting the tool mature enough for high-volume manufacturing insertion, so steady progress on the absolute bleeding edge.
Right. But of course, a company like ASML doesn't operate in a vacuum. Beyond these quarterly numbers, what were the major headwinds, the tailwinds discussed? Stuff that will shape their future, especially look out to 2026 and that ambitious 2030 vision.
Okay, yeah, let's talk investor context. Starting with that 2026 outlook and the macro geopolitical headwinds they're facing.
They seemed a bit cautious on 2026.
They are. They're preparing for growth in 2026, but they explicitly said they cannot confirm it at this stage.
And the reason?
The primary reason is this increasing uncertainty. Macroeconomic, geopolitical developments, particularly tariffs, that came up quite a bit.
And they actually said customer conversations show more concern about tariffs now than just 3 months ago.
They did. Which is leading to increased caution, maybe potential delays in CapEx decisions by their customers.
Yeah, the implications of tariffs are messy, aren't they? Affects direct costs, like selling systems into the U.S., import-export of parts, but also indirect stuff like hitting global GDP, overall market demand. It's a tricky tightrope they're walking.
Absolutely. But despite these short-term uncertainties, they stress that the underlying fundamentals remain robust, that strong AI demand in both logic and memory, that's still there.
Right.
Management really emphasized that the long-term semiconductor market outlook is strong. It's a crucial distinction, near-term noise versus powerful long-term trends.
Okay, so looking further out then, their long-term strategy, the 2030 vision, did they stick to those big numbers?
They did. They reaffirmed the 2030 revenue opportunity between $44 billion and $60 billion, and gross margins expected between 56% and 60%. That's a powerful long-term projection.
Hugely ambitious. What underpins that confidence?
It's supported by expected shifts in the product mix towards advanced logic and DRAM. Those segments require much more intensive use of advanced lithography systems.
More EUV layers per chip, basically.
Exactly. And the combination of their productivity roadmap on the current low-NA EUV plus introducing high-NA, that whole package is expected to reduce the cost of technology for their customers, which paradoxically increases the number of EUV layers they'll use.
So making EUV cheaper per layer encourages more layers.
Precisely. It means chip makers can apply it to even more steps within a chip, driving down the overall cost per transistor. It aligns perfectly with what they laid out at their Capital Markets Day.
Now, management did confirm that the 2nm logic node might see a bit of a pause in how quickly EUV layer intensity increases.
Right, a slight breather, perhaps.
But subsequent nodes are expected to drive significant increases again.
Yes. They said logic customers are expressing, quote, extreme bullishness on the long-term need for way more EUV layers. So yeah, maybe a minor dip or pause at 2 millimeters, but the long game still looks incredibly strong for litho intensity.
Okay, that bullishness was definitely noted. Even with that short-term pause qualification, the consensus seems to be that demand for these increasingly advanced chips, and therefore ASML's unique tech, is just going to accelerate.
That's the core story, yes.
Right now for our This Is Not Financial Advice segment, where we offer a, let's say, highly speculative yet maybe plausible trade idea for you to mull over.
Okay, let's hear it.
After everything we've just discussed, here's one. Consider taking a long position on ASML, especially if you see any weakness driven by this macroeconomic or geopolitical noise we talked about.
Okay, the rationale.
The rationale here is, well, pretty simple but powerful. The company's unique, absolutely indispensable role in advanced semiconductor manufacturing.
Monopoly status, essentially, at the high end.
Right. Coupled with those robust, long-term demand drivers from AI in both logic and memory, it just positions them so strongly.
So you're saying use any tariff-related dips as an entry point?
Basically, yeah.
Yeah.
While management is being prudently cautious about 2026 because of these short-term tariff uncertainties, the underlying technological trajectory the customer needs for high NA, for more EUV layers, that stuff remains completely intact, unchanged.
Okay.
So it suggests that any short-term sort of hiccups could present a compelling entry point for a long-term conviction play. I mean, this is an essential enabling technology. The world literally cannot build cutting-edge chips without them.
Buy the dip on the monopoly thesis, essentially.
Got it. So just to wrap things up then, ASML delivered solid Q2 results, propelled by strength in that high NA revenue recognition, keeping in good upgrade business, and just ongoing demand from the whole AI revolution.
Yeah, solid numbers, but the company is definitely navigating some near-term macroeconomic and geopolitical chop, particularly around tariffs. And that is impacting their visibility into 2026, causing some understandable caution.
Agreed. However, the long-term narrative for ASML, anchored in that relentless drive for advanced silicon, needing more EUV layers, the rollout of high-NA technology, that remains, I think, exceptionally compelling.
Hard to argue with the long-term picture, yeah.
So here's a final thought for you to consider, maybe chew on. How do you personally balance the immediate caution expressed by management, driven by these macro uncertainties, against those powerful, confirmed long-term technological and demand tailwinds for such a critical enabler like ASML?
That's the key question. And as always, just a reminder, the information provided here is purely for informational purposes. It should definitely not be considered financial advice.
Absolutely. Do your own research.